One of the traders did say to me, nobody wants to trade in this environment because there doesn't appear to be any rhyme or reason. Well, guess what? We've got definite reason right now. We thought, let's bring in Mohamed El-Erian of Allianz. The old saying used to be that when you don't know what to do, you can run the other way, you can go down the rabbit hole, or you can certainly call in the smart money. Mohamed, great to have you on the show today. Here's what worried me most. Not Janet Yellen's indecisiveness before members of the Senate today, but what happened with the European banks. It is very scary to me when we start to see that there was an Italian bank that had to suspend trading because it hit limit down. Are you seeing any type of Lehman-like moves, spasms in the European bank sector that could spread here and cause contagion?
We're not, because this is not a Lehman moment where the payments and settlement system is under pressure. And that's what made 2008 so scary, not just for the markets, but for the economy. But this is a repricing of banking around the world, and for good reasons. Earnings are going to come down because of the compression of the net interest margins. Credit quality is coming down, and investors know that their backs are no longer covered by the official sector. So this is a massive repricing of the banking system, and the banks that are vulnerable in Europe are going to be hit particularly harder.
Will the Fed be forced, Mohamed, to, if not go negative, at least for now, take back that quarter-point rate hike it instituted back in December? When you see these markets and you see not the best or strongest economic data, it does make you wonder.
So that's what the markets want. And the reason why we're getting this violent reaction is that we've been addicted to the Fed. And normally the Fed comes in quite quickly when there's this type of volatility. But it's not this time around, and for good reason. They really want to get out of this business. So we have to understand this, that we are coming to the end of the road where we could rely on central banks to bail out and to repress financial volatility. I don't think the Fed is going to want to go to negative rates. I do think they're going to manage down the expectations, and they're going to say, forget about the 4 hikes we suggested just a few weeks ago.
What has, though, the Fed proven by being given a test and checking off every single answer box? Yes, no, maybe, not sure. It really does hurt the confidence right now, and I'm not surprised that we're seeing the gyrations and the neck twisting that we've seen here, certainly down at the New York Stock Exchange and all of the trading floors.
Yeah, and Liz, you know, I think that this is part of a much bigger issue. And I wrote a book on this, I feel so strongly. We are embarked on what the English call a T-junction. The road that we're on, this one here, of central banks repressing financial volatility and we being able to get away with low but stable growth, that is ending. We will no longer be able to continue on this road. But what comes afterwards is still open. And what you're seeing markets do is reprice to the reality that we have borrowed financial returns from the future, we have borrowed growth from the future, and now we have to decide, are we able to produce it now?
There's evidence, though, that people, certainly in Europe, and I bring back, and I'm not putting words into your mouth about the banking situation there, but I bring back these Lehman-like gyrations, at least in Europe. There's evidence people are hoarding cash on the ground in Europe. Are you seeing any of that type of behavior? Because certainly when you look at gold today, Mohamed, this is a big jump in gold at the moment, up about $53. At one point we were up more than $60. We blew through all kinds of ceilings and resistance levels in a single day. Are you seeing that hoarding and frightened behavior? And could that then lead to any kind of, as I say, a systemic crisis a la 2008, but not 2008, as you've already articulated?
So 3 things in response. First, the gold move is actually a return to the role that gold used to play as a safe haven. We went through a long period where gold was unloved and wasn't responding to geopolitical shocks or anything else. Now gold is returning to its historical role. Second, it's not just gold that has moved. Let's see what's happened to the yen. The yen and the euro crossed today, and many people got caught off guard, which leads me to the third issue. The biggest risk is the one you've just pointed out. So far, all this volatility is contained to the financial sector. It's ugly, but it's contained to the financial sector. If it spills over to the real economy, if it makes people more risk averse, if people spend less and if companies spend less, then what is a financial problem becomes an economic problem and then feeds back into finance. So
sure.
Your question is critical, and we've got to keep a really close eye on whether we get spillover and spillback.
Well, I'm glad you brought that up. Psychology is a funny thing. People can talk themselves into things that aren't there. Do you foresee a recession? Sure, people could blame the media. They could blame me standing right here and saying, Liz, you're making too big a deal of this. But I'm just pointing out certain things and certain problems that I see. Do you foresee a recession, at least a dip into it here in the U.S.?
So I've put the probability of a recession in 2017 at 30% and lower this year. Now, 30% is significant because we don't have much ammunition in terms of policies to respond to that. So, but it's not the baseline, Liz. Our economy is still pretty strong. It's not great, but it's still pretty strong. But keep an eye on any spillover effects.
And finally, you foresee any kind of bailout of any of these industries? I mean, I'm wondering about a bailout of the oil industry. People told me I was absolutely crazy, but the World Bank is starting to look at certain nations that are heavily invested in oil. Could it come to that as you start to see that OPEC can't figure out what the heck it's supposed to do?
Yeah, so countries like Venezuela, Ecuador, Nigeria, Russia are going to have enormous difficulties. Some of them will go to the IMF and the World Bank. On the OPEC story, be careful. OPEC may well come out, I don't think they will, but they may well come out and say, indeed, we're going to cut production. But it's going to be very difficult to impose this on countries that are having huge financial issues. You know, it's hard. You're going to have cheating.